Ayan. Okay guys, good day. Good day, good day. Thank you. So for today, let us discuss deeper the um, accounting for a business combination. So what are the accounting procedures for a business combination? Siya nga pala, I would like to um, give credit to Sir Antonio Dayag for preparing the PowerPoint presentation for us. Right? Right? Yeah. Thank you, sir. Thank you. Thank you for the presentation. And once again, welcome sa ating course. Welcome back. So, accounting procedure for a business combination. So, the required method for accounting for a business combination under paragraph 4 of PFRS 3 is the acquisition method. So, under the acquisition method, the general approach to accounting business combination is a 5 steps procedure. Pero I think I have summarized this in our module into 3 steps. Okay? So, for a more detailed procedures, let's take the five steps process. Okay? First is identify the acquirer. Sino ba yung uh, um, bibili nung isang entity or sino ba yung magiging controlling interest dun sa isang entity, right? Another one is determine the acquisition date. Okay, so this is a vital step because for this one we will have to consider the acquisition date for our measurement process, right? Yeah. So next step is to calculate the fair value of the purchase consideration transferred. So, the cost of purchase. Okay? So, ayan. Then, next is to recognize and measure the identifiable assets and liabilities of the business. This is under the book of the acquirer. And finally, recognize and measure either goodwill or a gain from bargain purchase. Okay? If either exists in the transaction. Right? Yeah. So that will be our 5 steps procedure or process in accounting for business consideration. Right? Right. So if an acquirer gains control by purchasing less than 100% of the acquired entity, then the fourth step, okay? So yung ating fourth step includes measuring and recognizing the non-controlling interest. Right? Yeah. So discussion of non-controlling interest will be in chapter 2. So we will focus more on the acquisition for this chapter. Okay? Yeah. So first step, identifying the acquirer. Under PFRS paragraph 7, PFRS 3 paragraph 7 states that the acquirer is the entity that obtains, ayan, patalastas muna tayo from Spotify. Thank you Spotify for our background music for today. Yeah. Okay, so let's continue. Um, under PFRS 3 paragraph 7 states that the acquirer is the entity that obtains control of the acquiree. Okay, under paragraph 6 naman, requires that in each business combination, one of the combining entities should be identified as the acquirer. So this is our first step. So the concept of control under PFRS 3 will be discussed methodically in Chapter 2. So PFRS 3, however, recognizes that it may be difficult to identify which entity has control over the other combining entities. Okay, in the event that the overriding principle of control in PFRS 3 does not conclusively determine the identity of the acquirer, PFRS 3 provides additional guidance. So ano tong mga guidance na to? So determining the sorry. Asan na yan? Ayan, so hindi pa sinabi ni Sir Dayag kung ano yung mga PFRS provide yung mga PFRS provided guidance in identifying acquirer. So maybe this is more of an advanced topic on this chapter. Okay? So we'll continue with the next step. The next step in the process would be to determine the acquisition date. So under PFRS 3, defines acquisition date as the date on which the acquirer obtains control, okay, of the acquiree. So very vital talaga na malaman natin yung kung sino yung ating acquirer. Okay, so when we identify the acquirer, then we also identify the date of which the acquirer obtains control over the acquiree. So a business combination involves the joining together of assets under the control of a specific entity. So therefore, the business combination occurs at the date of the assets or net assets are under the control of the acquirer. So this date is the acquisition date niya. So when the acquirer obtains control over the assets or net assets of the acquiree, then this period, I mean the date when the acquirer obtains control is the acquisition date. So other dates that are important during the process of business combination, one is the date the contract is signed, then the date the consideration is paid, the date the date nominated in the contract. Okay lang kayo guys? Okay pa? sorry. Okay lang yan. Okay. Sige. We'll continue first, okay? So, kapit lang guys. Kapit. Okay. A date nominated in the contract, then the date on which assets acquired are delivered to the acquirer, and lastly, the date on which an offer becomes unconditional. Okay? So yan yung mga important dates, okay, na kailangan natin i-note during business combination. So the definition of acquisition date then relates to the point in time when the net assets of the acquiree become the net assets of the acquirer. Yan. So in essence, the date on which the acquirer can recognize, okay? So we should highlight this. Can recognize the net assets acquired in its own record. Yan. So ibig sabihin, delivered na sa ating acquirer yung net assets ng acquiree. Okay? Right? Yan. So, determining the acquisition date is our second step on the process. So, our next step is uh, wait lang. So this is already, this is still under the determination of acquisition date. So there are four main areas where the selection of the date affects the accounting for a business combination. So anong mga areas to? One is the identifiable assets acquired and liabilities assumed by the acquirer. Okay, so dapat clearly identified kung ano yung mga assets and liabilities assumed by the acquirer. Next, the consideration paid by the acquirer. So, dapat properly determine din kung ano yung consideration paid by the acquirer. Next, acquirer may acquire only some of the shares of the acquiree. Right? Right. Then, the acquirer may have previously held an equity interest in the acquiree prior to the to obtaining control of the acquiree. So, pwedeng meron na siyang existing interest dun sa acquiree. So, parang nagdagdag na lang siya ng interest dun sa acquiree to gain control. So, the effect of determining the acquisition date is that the financial position of the combined entity on acquisition date should report the assets and liabilities of the acquiree on that date. And any profits reports as a result of the acquiree's operation within the business combination should reflect profits earned after the acquisition date. So, kapag within the business combination, the profit during those days will be recorded as part of, as events after the acquisition date. Okay? Kaya pa? Kaya yan, guys. Kapit lang. Kaya natin to. Okay? Mukhang muulan na. Yeah. Okay. Restless hearts sleep alone tonight. Okay. So, let's continue. So, our next step after determining the acquisition date would be to calculate the fair value of the consideration transferred. So, accounting records of the acquirer. And according to PFRS 3, paragraph 37, the consideration transferred is measured at fair value. Okay, as I have mentioned before, at acquisition date. So, also, it is calculated as the sum of the acquisition date fair values. Okay, so one is the assets transferred by the acquirer. The liabilities incurred by the acquirer to former owners of the acquiree. So that will form part of our consideration. Then the equity interest issued by the acquirer. Gets? So if the acquirer transferred assets like cash and non-cash assets, that will be part of our consideration. And if there are liabilities, okay, incurred by the acquirer to former owners, so that will also form part of our consideration. And lastly, the equity interest issued by the acquirer should the acquirer opt to issue shares of its own entity to the acquiree. So in a specific exchange, The consideration transferred to the acquirer could include just one form of consideration. So, sabi ko nga kanina, parang kapag nag-transfer siya ng asset, pwede siyang cash asset, okay, or non-cash asset, but could equally well consist of a number of forms such as cash, ayan, as I have mentioned a while ago. So the consideration transferred includes the following items. Ayan, so cash or monetary assets, non-monetary assets, equity instruments, liabilities undertaken. Ito yung sinasabi ko kanina, kapag may liability in-incur si acquirer dun sa owner ng acquiring. Okay, then lastly, the contingent contingent consideration, and lastly, the share-based payment awards. Okay? Yan. So for the contingent consideration, ito yung sinasabi natin na the contingent consideration may include the distribution of cash to or other assets or issuance of debt equity instruments. Okay? So usually, an obligation of the acquirer to transfer additional asset or equity interest to the former owners of an acquiree as part of the exchange or for the control. So acquiree, if is specified under future events occur or conditions are met. However, contingent consideration under contingent consideration pa rin also may give the acquirer the right to the return of previously transferred consideration if specified conditions are met. Okay, so for contingent consideration, these are add-ons to the base acquisition price, right? So as previously discussed, as part of our recording discussion on the contingent consideration. So this is just add-on to the base acquisition price, that is based on events occurring or conditions being met sometime after the purchase takes place. Okay, so as per definition, it is a contingent. So it is based, it will be depending on meeting of some conditions. Okay, so this topic will be discussed further later in this chapter. So I have already recorded a discussion on this topic, right? Right. Oh no. may sunog ata. Okay pa kayo, guys? Yan. Gising. Si ano eh. So, sarap paglaruan ng aking sound effects. So, these are the considerations. Okay? This is the step 3 on our accounting for business combination. So, what are the acquisition-related costs? So, for acquisition-related costs, ayan, so, in addition to the consideration transferred by the acquirer to the acquiree, a further item to be considered in determining the cost, okay, of the business combination is the acquisition-related cost. Ito yung mga cost incurred um, to perfect the business combination. Okay, so because such costs are not part of the fair value of the acquiree and are not assets, they are as follows. So these are excluded in the measurement of considerations paid. Okay, so these acquisition related costs. Okay, there will not be, they will not form part of the consideration. Right. Right. Wait lang, ba't nawala yung... Right? Iba. May nag-like. May nag-like. Ang daming likes. Mga ganun. May nag-espadahan. Yeah. Sa mga nanonood ng Game of Thrones, I mean, sa mga nanonood pa lang, okay, sa um, nanonood ngayon ng mga Order of the Night Templars, mga, yeah, shout out sa inyo. Okay? So, for acquisition related costs, as I have said, will not form part of our consideration paid. Right? Right. So, yeah, these are still under the acquisition related costs. So, you can find the specific details in your book. So, we are still under chapter 1. So, cost of issuing equity instruments. Okay, share issuance cost. So, the cost of issuing equity instruments is also excluded from our considerations paid because this will not form part of the fair value of net assets of the acquiree. Right? Yan. Make sure that if we come across this cost of issuing equity instruments or issuance cost, uh, to exclude them from our considerations paid. Okay? Ayan. So, ayan, cost of issuing debt instruments also will be excluded from our consideration. Okay? Yeah. So, please continue reading on our, I mean, reading the book by Mr. Antonio Dayag. Again, sir, thank you for this presentation. So we have a summary of the acquisition related costs. Okay? Yan. So you may review this kasi I think this is also included in our book. Okay? So let's move on to the principles in assessing what is part of the business combination. So under PFRS 3 requires that an acquirer shall assess whether any portion of the transaction price, payments to or other arrangements, and any assets acquired or liabilities assumed or incurred are not part of or a component of the exchange for the acquiree. So only the consideration transferred and the assets acquired or liabilities assumed or incurred that are part of the exchange for the acquiree shall be included in the business combination. So any portion of the transaction price or any assets acquired or liabilities assumed or incurred that are not part or component of the exchange for the acquiree shall be accounted for separately from the business combination. So yun nga, yung mga form yung mga related acquisition ko ay oo. Yan. So let's move to the recognition and measurement of assets acquired and liabilities assumed. So accounting records of the acquirer. So I think ayan, we have already wait lang, tama ba? We have already finished the steps. Not yet. So I think we are still on the third step, which is the measurement of the fair value, okay, of the tama, we are now on the third step, right? Recognition and measurement of assets. No, we are already on our fourth step. Sorry, guys. So we are now on our fourth step. Ayan. So for our fourth step, recognition and measurement of assets acquired and liabilities assumed. So these are under the accounting records of the acquirer. So under PFRS 3, gising pa kayo? You're still there? Ay, nagkikambing na kayo, guys. You're still there? Okay. Sige. So, sa ating fourth step, recognition and measurement of assets acquired. So, under PFRS 3, yan, sets out basic principles for recognition and measurement of identifiable assets acquired, liabilities assumed, and non-controlling interest. Having established those principles, the PFRS 3 provides detailed application for specific assets and liabilities and a number of limited exception to the general principle. So under the acquisition method, the acquirer is required to first recognize identifiable assets and liabilities separately from goodwill. Okay? Then measure such assets and liabilities at their fair value on the date of acquisition. Ayun lang, dalawa lang pala. So, recognition principle for asset and liabilities. So, the keyword is identifiable. Okay? So, the acquirer may be able to identify many more assets and liabilities than those shown in the acquiree's balance sheet. So, under PFRS 3, paragraph 10, requires that as of the acquisition date, the acquirer should recognize separately from goodwill, the identifiable assets acquired, liabilities, right? Yan. So, under paragraph 83 naman of the framework for the preparation and presentation of financial statements specifies two recognition criteria for assets and liabilities, stating that the recognition occurs if it is probable that, yun nga, yung probable and measurable. Right? Yan. So, those are the two major main criteria, okay, for recognition of asset and liabilities. So, conditions for recognition principle. Under paragraph 11 and 12, there are two conditions that have to be met prior to the recognition of assets and liabilities. Okay? At the acquisition date, the asset and liabilities recognized by the acquirer must meet the definition of assets and liabilities in the framework. So we have already discussed this in our intermediate accounting. Okay, so the definition of assets and liabilities. So any expected future costs cannot be included in the calculation of assets and liabilities acquired and liabilities assumed. Okay, so clear tayo doon. The following are outcomes as a result of applying this recognition condition. For post-acquisition reorganization, then unrecognized assets and liabilities. For the post-acquisition reorganization, cost that cost the acquirer these are the costs the acquirer expects, but it is not obliged to incur in the future to affect its plan to exit an activity of an acquiree. Okay, so to terminate the employment of or relocate an acquiree's employee is not liabilities at the acquisition date. So these are post-acquisition reorganization. Okay? So under unrecognized assets and liabilities naman, the acquirer may recognize some assets and liabilities that the acquiree had not previously recognized in its financial statements. For example, the acquirer recognizes the acquired identifiable assets such as yung brand names, patents, in the ayan. So, yung acquiree, hindi niya re-recognize tong mga to, but the acquirer may recognize it in its financial statements. Okay? Right? Ay, ba't ba? Right? Right. Okay, so let's continue. So exception to the recognition principle. One area affected by this condition is the accounting for contingent liabilities. Under past 37 provisions, contingent liabilities and contingent assets. Okay? So, the items acquired or assumed must be part of the business acquired rather than the result of a separate transaction. Excuse me. Yan. A possible result of applying the principle of PFRS 3 is that there may be assets and liabilities recognized as a result of the business combination that were not recognized by the acquiree because of the provisions under the PAS 37. Okay, so one example of this is internally generated intangibles that are not recognized by the acquiree. Okay, so internally generated brands. Yan. But they would be recognized by the acquirer. So the acquirer would measure this at fair value. Yan. So we will appreciate more of this when we have some examples or some activities on the really accountants can easily appreciate the theories when we put numbers, right. Yeah, so we will have more on this as we go on with the topic, right. Yeah. So again, thank you, Mr. Sir Antonio Dayag for this very wonderful presentation. Yeah. Okay pa kayo guys? Okay pa? Gising pa? So, next topic is the measurement principle for assets and liabilities. So, measurement principles, these are actually similar to most of the measurement principles. So, they are measured at their fair value on the acquisition date. Okay? So, you can read more on this using our textbook. So, definition of fair value under PAS and PFRS 3. Ayan. Corner of my eyes. I will not um, discuss this in a detail. You can just read this on your own for your as your basis. Okay. Valuation techniques. So the objectives of using valuation techniques is to estimate the price, right? So three widely used valuation techniques: the market approach, or income approach, cost approach, yan. So in some cases, a single valuation technique will be appropriate, whereas in other multiple valuation techniques will be uh, appropriate, right? Yan, valuation, uh, yan. So take note of this. Yung the preferred method is quoted market value. Okay, where an active market for the item exists. So where there is not an active market, independent appraisals, discounted cash flows analysis, and other types of analysis are used to estimate fair values. Okay? Ayan. In summary, the procedures for recording the assets and liabilities of the acquiree are as follows. Identifiable tangible assets. Yan. Identifiable intangible assets. La, 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 la.
You're invited to a new way of listening with Premium. Premium lets you connect to your speakers or TV and listen to your music ad-free. With super easy setup, you can connect to any compatible device and enjoy music without interruptions. Plus, listen on demand and play any song anytime, even on mobile. Upgrade now to unlock Premium. Tap the banner to learn more.
Ayan. So, um, and those are the the details on our step number 4, which is the um, recognizing and measuring the identifiable assets and liabilities of the business. Okay, so we will continue on the last step in our in another slide or in another recording. So hopefully you have you have grasped the main idea on the 4 steps that we have discussed under the accounting procedures for a business combination. We will um, move into the next step, which is recognizing and measuring either goodwill or a gain from a bargain purchase, if either exists in the transaction in another discussion. So that will need another recording because it will also uh, need I mean you also need to be re-energized or recharge before we proceed with the recognition of goodwill or gain from bargain purchase. Okay, so for this one, if you have any questions, clarifications, and reactions, please don't hesitate to message me through our LMS group chat or our Facebook Messenger group chat. Okay? Right? Okay then. And have a great day and see you on our next session. Bye guys. Let's call it a day.